I want to brag. You know, they said this about a lot of things. No other president can do some of this shit I'm doing. No other president. The things I'm doing, nobody else was going to do them. They say it all the time. Sir, could you do this? You're the only one to do it. I don't want to brag. You know, they said this about a lot of things. No other president could do some of this shit I'm doing. No other president. The things I'm doing, nobody else was going to do them. They say it all the time. Sir, could you do this? You're the only one to do it.
I don't want to brag, you know they said this about a lot of things. No other president could do some of this shit I'm doing. Nope, I don't president, the things I'm doing, nobody else was gonna do them. They say it all the time. Sir, could you do this? You're the only one who can do it. Nope, I don't want to brag, you know they said this about a lot of things. No other president could do some of this shit I'm doing. Nope, I don't president, the things I'm doing, nobody else was gonna do them. They say it all the time. Sir, could you do this? You're the only one who can do it. Only do it, 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 only do it. No, I do. I don't want to. No, I don't want to brag. You know they said this about a lot of things. No other president could do some of the shit I'm doing. No, I don't president the things I'm doing. Nobody else was gonna do.
Good morning, guys. Guess we'll turn this off for now. I hope you all are having a great morning. I heard through the rumorville that the Iranian government had attacked a U.S. battleship or something and scared it away. It's just so fucking funny to me that anybody would even believe that to begin with. But, you know, some people will latch onto whatever they can. They got that bad TDS. I used to have it too, so if I can overcome it, you probably can too. Real quickly, Trump launches Project Freedom. We're going to talk about Iran. We'll get that out of the way super quick this morning. And guys in chat, if you could comment, like, do all the things, it's greatly appreciated. But Project Freedom starts today. This is actually brilliant because we just ended the war on Friday. And now we're doing a humanitarian aid convoy and just begging Iran to attack us so that we can reinitiate a war. And that 30-day window where Congress gets to hold up the war and basically, you know, I don't want to say filibuster, it's the wrong word, but basically delay everything that's going on and make it to where the IRGC can win. That isn't happening anymore. The operation starts today. Ships low on supplies. We're going to help them through the strait. It's a global request from other countries for us to be able to help out with humanitarian aid. You got to love that. Any interference will be met with force. And again, why do I love this so much? Chris Rollins wrote, "This is a savvy legal move by Trump. May 1st, War Powers letter formally ends hostilities, preserves force posture, asserts Article 2 constitutional authority." So that the war is over. Or the operation, special military operation, whatever we want to call it. What did Putin say? I think it was that. May 3rd, Project Freedom announced as humanitarian operation, not military. Monday, U.S. Navy escorts neutral commercial ships through Hormuz under freedom of navigation rights. If Iran fires on it, that is Iran starting a new conflict, and that resets the timer. So I just think this is utterly brilliant. I just don't know why people bet against Trump. They act like he's an idiot. I've said this before. Don't take him seriously. And I stole this from Mayor Tusi. Anybody who watches Tusi TV, please throw it out in the chat. He is the best source for Iranian-related news. He's a Persian who lives in the UK. He's a brilliant man. But he always says, take Donald Trump seriously, but not literally. And it is very much the truth. And people who don't do that suffer. So yeah, so that's good. Also, mysteriously, there was an explosion in Zanjan in Iran province during a clearance operation of unexploded munitions, killed 14 IRGC members. What else do we have over here? Robin Brooks, narrative shift on the blockade. The U.S. blockade won't work. Number 2, it works, but Iran can outsmart it. Number 3, it works, but it's slow and incremental. Number 4, wow, it's hitting Iran quite badly already. Number 5, the U.S. blockade was a good idea. Number 6, should have done this with Russia. And now I think number 7 is the war is over and now we're doing humanitarian aid. That can never possibly work. So I think we just transition from one to another. On another front, my brother from another mother, my gay brother from another mother, Treasury Secretary Scott Bessent, probably one of the best Treasury Secretaries we've had in recent history, sanctioned the son of a senior IRGC officer worth tens of millions of dollars. And so this piece of shit now doesn't have access to any of his money. I love that. And then there's a new Lyft type service available in Iran. If you're an IRGC member, all you have to do is stand at the corner and search people's cars and harass them, and they will give you a lift anywhere in the city. So it might not be the way you want it, but you'll get a lift. As I've said before, people that don't have guns realize how heavy cars are. And listening to Treasury Secretary Scott Bessent, he says it's very difficult for rats in a sewer pipe to know what's going on in the outside world. Some color for the Iranian leadership, as they literally are in the dark. The United States has complete control of the strait. There is a hard currency, it's the US dollar, and there's a shortage of it in your country. Food and gasoline rationing are in place. The entire international community has turned against you. The blockade will continue until there is pre-February 2027 freedom of navigation. And so we're more than happy to ride this fucker out, and we're going to. And yeah, that's enough about that. It's going to go fine. I wouldn't even worry about this. I think maybe this week there's some chatter about it. I could see something like that. I could mainly see that not because it makes sense, but because really we're overdue for some kind of pause. And not with everything, guys. DRAM, if you guys listen to me, everybody thought I was crazy last week for jumping into DRAM and Micron because they're like, why the fuck would you do that? It's went up so much already. But, DRAM's up 4.31% this morning again. So it's been a pretty good time with that. And then, guys, if you're not looking at MicroStrategy, up 2.31% after being up 7% last week, sitting up 73%. Little old Bitcoin, if you look in the bottom right corner, only up 31%. Strive, the smaller brother of MicroStrategy, 1/50th the size, roughly, in market cap, is up 150% from the low. But getting back to the S&P, let's just look at this real quick here. So I've been talking about this for a while, but we've got a weekly RSI that has been going back about 2 years, and it is saying bearishness, right? Now, if this breaks, then that resets it, and it's all over, and I think that's what's going to happen. This impulse right here is just too powerful. But for now, this is doing, if you look at this midline, kind of a midline, it's a rising midline, but you can see the resistance line here. We've hit it. And we started talking about this like a week or two ago. We hit it, and now we rejected off of it. It's a little bit lower. I don't know where, including pre-market, it's probably under the 72.30 that we showed in the screenshot. Now, I am pointing out that, hey, we had this trend line here. It coincides really well with peak volumes that go back several years, right? Like this is 3.5 years roughly of peak volumes. And we could drop down to that. We could take a pause, and then we could go higher. That would be the natural way of doing it. And I think some of the big dogs are meant to go a little bit lower. And so I think that's perfectly okay. I'm not worried about that at all. We're going to talk about DRAM a lot today. We're going to talk about memory. We're going to talk about AI. We're going to talk about Bitcoin. We're going to talk about what's happening with STRC and SATA because that's so important. I think that the MicroStrategy, Strive, and memory space alone are just some excellent plays for you to make a bunch of money. If you guys didn't listen to Jordy Visser over the weekend, you gotta start following him. I would recommend you watch him before you watch my own videos. Now, I don't do that many. He does about 2. He does one, I want to say it's either Friday or Saturday with Anthony Pompliano. And then he does another one from his own channel. I think it's Sunday. You guys correct me if I'm wrong in chat, please. He is absolutely fucking brilliant. He's called this kind of scarcity market. He's not perfect on everything. I think I'm better at macro and geopolitics than he is. But man, is he on it when it comes to embracing AI. He's using every platform out there. He's using tools, and I'm going to start doing this too. I'm going to get my Mac Mini finally set up. It's sitting back there, like right behind me in that little box. I need to get that set up, and I want to start grinding some of these AI tools out and just testing a bunch of different ones. Some of these tools, guys, will run 300 agents at one time, and I love Grok. but Grok will do like 4. So the level, and I think Grok eventually passes all of it. I'm not even worried about that because Elon's just relentless. But they're just not in the playing right now. And there's some amazing tools out there, and I want to start utilizing them too. But Jordy is, for his age, he is brilliant. He is so in tune and hip with what's going on right now. I'm not behind his paywall, but I'm probably gonna sub to it. I sub for like 30 people on X, I think, or something like that. And then and there's very few things I sub with outside of that. But I love Jordy and I want to support him and his work. Hey, it is May the 4th, and May the 4th be with you. I don't have a good coffee mug for that. I'm just rocking my Tesla mug. But I did bring out my AT Walker, and somebody made this bad boy out of a bunch of different metal parts. You can see like some Phillips head screws up there. So I am sporting it a little bit here. Heavy, super heavy too. And this thing, you can crack a skull pretty easy with it. But yeah, so I think be ready. Jordy Visser, he is brilliant. He's one of the most brilliant people out there in regard to what is happening right now in the AI space. And also, not even just that, just talking about scarcity and why everything is changing, why software companies could struggle. I know that Tom Lee recently indicated that he is bullish on software, and they brought that up to some of their top plays. I agree with some of that. I think companies like Zeta, we'll talk about that probably a little bit too, are amazing and great opportunities, but they have a data moat. And I would argue that a lot of software companies don't, and they can be replaced by AI. So I do think that he's right about the software space becoming harder to invest in, and I think that leads into a memory space, which is absolutely insane right now. And I'm going to show you guys a bunch of reasons why. So if you're here for this, this is DRAM. This is an ETF that was created that gives you access to Samsung and Hynix, South Korean companies, along with Micron, and a bunch of others. And I'll show you what that portfolio looks like later. But up 4.38%. And actually, maybe we'll just segue to make it easier for the wife to be able to do all this stuff later. We'll jump back out of U.S. economy. I want to jump into DRAM, and I want to talk about this because it's absolutely fucking amazing. He loves energy plays. He does. He actually loves chemicals more right now, which I agree with. And he thinks that energy, he's getting into energy, but he also thinks that that's going to be kind of a laggard play. It takes just a little bit longer than like what we're seeing within memory and some of these other spaces. Even though I do think that companies like Cypher, Iron, Nebius, CleanSpark, they can do better earlier. But let's talk about this real quick. So memory is something I actually used to come from the tech sector, and I know a lot about technology. And memory is very important. It's become super important now. What we saw in this first wave, guys, was the chip companies. We were having to put massive amounts of compute towards the graphics cards, towards training, right? We needed to train the AIs and get them smarter. And there's definitely still a massive demand for video cards and training for new models, right? But what we're seeing now in this second phase, and there's a bunch of brilliant people that we're going to quote along in here, is inference. And inference is different. Inference is CPU based, and you've started to see those pop. Intel is ridiculously valued right now. And I think the U.S. is up over $30 billion on its investment. There's going to be more of that, guys, and we'll have to talk about that later, too, because that's just a whole nother point about the U.S. government being able to offset all their debt with massive gains by embracing Bitcoin and AI. That's just a different conversation, though. We'll try and touch on it. But Peru, who I like, interesting head. He kind of reminds me of the Coneheads. Was it called Coneheads? Do you guys remember what that movie was? It's like from the 80s or 90s. Is it Coneheads? Anyway, most people probably don't get the reference. But AI inference demand to surge over the next 4 years. By 2030, inference will surpass training to become the dominant workload in AI data centers, representing more than half of all AI compute. So we're seeing this structural shift. Good morning, Taiwan. JT, how you doing, brother? But we're seeing this structural shift where inference is going to be growing, but we also have AI compute growing at a rate that's just fucking bonkers, okay? Right now, I wanted to show this. So Trade Whisperer, great guy to follow. It's Trade X Whisperer in here. I don't know if he's following me. Is he? Son of a bitch. Come on, get on it, brother. SK Hynix is up 9%. So again, South Korean company, their exchange, the South Korean exchange is just bonkers. Up 116. 1,000 or 9% in one day. And so that's one of the reasons that we're seeing DRAM up 4+% today. And I want to talk about some of these specific companies and then zoom out a little bit too. But if you look at Micron here, I said, here's the bear case for MU. And this is kind of a joke, but it's also not. MU went from a 5x forward PE to a 6x in 2 weeks with 30% in gains. Now, what are we looking at here? Right here. I want to say this is, is this forward PE? No, I think it's earnings per share. And EPS. And so if you look here, this is the bear case for it. The bear case is going into not seeing a reduction in spending, but seeing constant increases that are in the multi-billions for earnings per share. EPS just climbing in and just getting stronger and stronger and stronger and just growing until the end of 2027. That's the bear case right now. This is the bear case, that it doesn't get even more powerful. But we're going to talk about why that's wrong in a little bit here. Popular stocks by PEG ratio. PEG ratio, less than 1 usually means misprice. Greater than 2 usually indicates danger zone. Tesla's a 4.9, been in it for a while. Palantir up there. Apple up there. Google up there. Intel now up there, 2.3, right? These are all in the danger zone. What's over to the right? Is that SanDisk? There's Oracle. Lots of debt in Oracle. Not touching that. Too big of a cap, too. And Micron. Micron is a 0.3. So this thing is just incredibly undervalued. And I don't think enough people understand this. Guys, I haven't updated the portfolio. I will get that done, too. I'll try and get that done this morning. Right now, I'd say my largest position is probably Strive, with MicroStrategy being next. DRAM is in there now, and then others, and probably Tesla and some others. So that we own a lot in this. I think I've got 400,000 right now in DRAM and Micron. So I definitely appreciate these plays, but I'll update that stuff so you can see it. Let me look at everybody's comments here. Gnome said, hey, he thinks Qualcomm is a sleeper for CPUs on edge computing. I know he said that, yeah. And I've looked at some. I've started to look more at those to try and figure out if there's good ones that might be sleepers. I need to probably subscribe to a service so I can be more informed and be able to reflect that when we're talking. DRAM, biggest bonus is SK Hynix exposure. It's Samsung and SK. SK for size. You're 100% right. But you can get Micron, but you can get these other two companies that you don't easily get access to in the United States that are just crushing it. It was Coneheads. Awesome. Thanks, JT. Central says, did you get your Mac Mini up? No, I didn't. It's sitting behind me right over there. It's like right where my thumb is, right there in a box. But that's my goal actually for this week. Let's see what else. We got Kirby said, my Micron holdings are 5-1. My DRAM holdings. Should it be more of a 50-50? It's up to you. I actually have more DRAM than I do Micron, and I'll show you why in a second. I also just wanted to point this out real quickly. So they're getting 5-year contracts, up to 5-year LTAs on these companies now between DRAM and MU and SanDisk. They're getting 5 years of LTAs, which is crazy. Also, this says current semi stocks ranking by forward PE and forward PEG. Note directional only. Data might vary depending on sources and methods. He's right. And if you look down here, so what I wanted to look at, so what do we have? The top right, we got forward PE, next year EPS growth, and forward PEG. So next year EPS growth for Hynix, which is in DRAM, 25% of it, 23.2%. Samsung, which is in DRAM, 25% of it, is 18.1%. Micron is 69.5%. So again, very heavy growth. And so Micron is I believe really strongly in this company. I think it's going to go up a lot. DRAM is I don't give a fuck. I'm invested in the whole space and I'm up 4.5% today. That's DRAM. And it's got a bunch more in here too. But this is interesting because forward PE for Intel, for instance, or ARM Holdings is 62 for Intel, 98 for ARM Holdings, with a PEG in ARM of 4.67, which is, again, dangerous. Intel looks better at 0.61. Next year, EPS growth at 101%. So they're sitting pretty good. Their ARM looks dangerous to me. But I want to show you what is in this DRAM container. So again, Samsung Electronics, a 25% allotment, 24% roughly for Micron, 23, probably today, 24% for Hynix. And then there's a bunch more. So you can see where SanDisk is in here, Western Digital. Western Digital's chart looks ridiculous. But all these things are set to scream up a lot higher because there's a structural change going on behind the scenes. And these things are incredibly undervalued. Now, what do I mean by that? Memory chip Supercycle Fiscal AI says, and he talks about these three companies, and he shows their estimated full year 2026 earnings. Do you see a subtle change? Can anybody see the subtle change that occurred in these companies this year? Can anybody see it? It's very hard to see. It's maybe this right here. Maybe it's this. Maybe it's from 2023 being negative to doubling over the next 2 years to whatever the fuck this is. All right, let's keep going. Let's listen to the Micron CEO and see what he has to say over the next 1 minute and 30 seconds. He's talking about a potential 5x within 1.5 years.
Jim, memory
That's just for DRAM, I think. Just for DRAM.
supply is tight across the end market segments.
I wish I would have listened to this guy. This guy was on CNBC. I ended up buying SMCI. Why? I have no idea. They have no moat. It was a stupid decision. But he told us well over a year ago that memory was going to be under drastic undersupply and that they would be able to name the price. And all we had to do is listen to him and you would have made 10x easy overnight.
Of course, HBM is in tight supply, and non-HBM DRAM is in tight supply, along with NAND. They're all in tight supply. We have tightness across all our end market segments. We are only able to supply for our key customers in the midterm.
Just for key customers.
About 50%.
Only 50% of their needs for key customers.
To 2/3 of their requirements. We are continuing.
Only 50% for their key customers, only 50% of their 2/3 key requirements. That's a lot of slicing and dicing there, people.
To work hard to bring up supply, but bringing up supply is a very long lead item because DRAM needs new capacity. New capacity takes new construction. Construction is long lead time item. So earliest that we see in the industry meaningful ramp starting to happen, and it will gradually happen over time, is starting in 2028 timeframe. So I do not see supply catching up to demand for considerable period of time here. Of course, this is a period of heavy allocation.
2 years.
Micron has a very strong technology and product portfolio, and we continue to optimize the mix of our business. Today, non-HBM DRAM has actually higher profitability than HBM. NAND has strong profitability as well. So we are managing the mix of the business, keeping in mind long-term considerations, and absolutely data center is the biggest growth driver. We are well positioned with our product portfolio, including HBM, to address these demand trends.
This is just so slick, guys. I wish I would have paid more attention to AI. Just think about this. If for anybody who was on the crypto train in October, don't you wish you would have sold all your shit or like 80% of it and then realized what was happening in AI? Don't you wish you would have done that? I mean, let's look at that, right? Let's see what did Micron, again, this guy over a year ago, probably a year and a half, told us what the future was. Look at this. I got to get rid of this one, guys, which is from last week because we already hit the .618. I got to move this up here. This is just crazy. Now, let's look at this chart and see if in October you would have sold your shit coins and then bought into this. And this is already underway, but let's just say you did. Let's say you did. Let's say over here you made the transition to where we are now. Just in Micron, you'd be up 240%. Now, again, with like Strive, it's up 150 now. So these things have come back. But other companies like SanDisk, it's like 1,000% over that period of time. You could have done so much better with all of this. It's just important to, again, remember how this stuff works. And I think Micron is going a lot higher. There's price points, guys. There's been adjustments now and price and from analysts that are pushing this thing towards 1,000. SanDisk just got like 10 or 11 upgrades just the end of this last week. Hindsight is always 2020, but we can learn from it, right? And if we would have been paying attention to the right people and the right topics at that time, we could have made a lot of money. And the worst part is I've got a technical background, and I just wasn't paying attention to it because I was so hyper-focused on Bitcoin, because I just knew the timeline was going to pay out just like it had done before with not enough data points. But again, we just have to think about these things and be smart going forward. This is interesting too. So this shows vector. It shows HBM, high bandwidth memory, versus DDR5 and NAND. And so you can see how the GPU accelerator part everybody's getting excited about, right? But what's actually happening? Again, this inference is actually accelerating at a greater rate, which is awesome. Who here is 50% MicroStrategy and 50% DRAM? I'm not quite like that, but I do have a lot of both. So I guess I'm probably a part of that. And this, again, it just shows NVIDIA in 2023. It says NVIDIA, this is what memory pricing power looks like in the current AI cycle, now posting the same gross margins. NVIDIA had 74% gross margins in 2023. Micron had -1. Then now they're tied. And Micron's getting ready to pass NVIDIA in a much smaller market cap. I want to say it's 1/9 the size, maybe 1/10. Let me see here. What's NVIDIA at right now? NVIDIA is at 4.82 billion. Yeah, no, about almost 1/10 the size. Right here, SK Hynix said in their Q1 earning call that just happened that their HBM demand from customers over the next 3 years, again, HBM, guys, is going to be the slower trend. The inference is actually the faster one. They're 3 years behind on demand, is what they said. So if this is a structural change in the pricing of memory. This is the point I'm trying to get across to you guys. I see 400 people here. If you guys could hit the likes, it greatly helps the channel. It's been decimated since October, just because of me cutting back to 1 day a week. And then also people just getting tired of losing money and having a rough route of it if they weren't in the AI trade. But it's coming back, guys. That's what I'm trying to get across to you. I hope you can see it. AI is going to do well. Bitcoin is going to do well. And you can benefit from both right now with life-changing gains. If you're just getting started, you couldn't have picked a better time to get involved. Again, this is just another pie of the DRAM. We'll probably jump from this topic real quick here. Oh, and also DRAM, the trailing PE, it's not the trailing PE. The forward PE is in the 5s right now for DRAM. So this thing, you could pull it up on your own, but this thing is looking cheap in my opinion. I do want to jump over into AI and chips just to close out this segment of this discussion real quick here, and then we'll get over to U.S. economy. And I did see, guys, that Jameson Greer just got done talking on CNBC, so we're going to go back and listen to him too. What's likely to move faster, MU or DRAM, or is it hard to tell? I think they're both going to do really well. Hynix is a big one, but then again, you have some bigger and smaller companies inside of the DRAM one. I think DRAM is the safer bet, and you're going to get ridiculous returns. I mean, if we're just looking at this, guys, and this isn't going to happen every week, but if we just go back here to the beginning of April and then draw this line up, DRAM is up 48%. We can kind of do something similar with Micron to see what that looks like. Let's go to the weekly here and just see what that went to. So let's just call this roughly the same time frame. It might be overdoing the bottom. So Micron is up 78%, and I'll just double check DRAM here. Well, DRAM didn't exist, I don't think. Let me go back to the day. I want to make sure I'm prepared. Yeah, okay. So April 7th is what we needed to do to get a really accurate proximity of the number. So I don't want to cheat. Let's find 7 here. Let's find 7. So 7 is probably like right here. Okay. So they're comparable. They're actually comparable. But I think you de-risk by getting DRAM because, again, you're pulling in everything. So that's my thought on it. Sid says, October 10th, me personally, I went way more AI over BTC. Oh, good for you, dude. BTC crypto or BMNR, now not chasing, but back more into crypto. That's smart. You did a great job. You beat me out, bro. So I'm proud of you, man. Good job. All right, real quickly, I want to talk more about AI because it's important. David Sachs, I said it's impossible to be bearish right now if you can get over your TDS. What do I mean by that? I've been saying for a while, this is David Sachs. He's a billionaire, kind of a cool guy, all in one podcast. I've been saying for a while that AI CapEx will be a 2% tailwind to GDP growth this year. In fact, according to a new report from Morgan Stanley, the numbers are even stronger. It's more like 2.5% to over 3% next year. This is Morgan Stanley saying this, not David Sachs. He wasn't bullish enough, I guess. And this understates the impact of AI for two reasons. One, this is just investment by 5 hyperscalers and doesn't include all the startups and other companies investing in AI. There's an entire supply chain. We're going to look at this in a second, but like, look at CAT. CAT has went straight up and to the right with their stock. CAT is not a digger company anymore. They're literally, so first off, all their construction equipment is building all the AI data centers, and now they're doing most people have no idea that Caterpillar owns Solar Turbines, one of the biggest gas turbine manufacturers on the planet, over 17,000 turbines operating across 100 countries. So these guys are benefiting from that too, and they're getting a bunch of investment money, and they're building out a bunch of infrastructure. Who would have known that CAT, the fucking construction company, would be one of the biggest benefactors of AI? This is going through the entire economy. You can't have almost, $700 billion theoretically of AI investment just from the biggest hyperscalers in the United States this year and $1 trillion next year and not do really, really fucking well. I just hope you guys understand this. So just the AI hyperscalers, he says here, it doesn't include all the startups and other companies like CAT, just one random ass company. 2, CapEx is the investment to create the token factories. It doesn't count the economic activity resulting from what happens inside the token factories. So all of a sudden you've got people, I don't know, solving fucking diseases using AI or building better businesses with virtually no employees because they're almost all agents. There's so much that's happening in the economy right now. And this doesn't include all the stuff Trump did to lower taxes for people. This doesn't include all the deregulation. This doesn't include the Invest in America. This doesn't include the Trump Gold Card. You can come into the United States and pay for it. He hasn't released the numbers on that. I don't think they're going to do it for a while, but they will show you those numbers eventually. That doesn't include any of that stuff. So I just hope you guys are getting the themes here that we're building a lot right now. This is real. I was around in the dot-com bubble. My dad got into investing, and I was very attuned to investing at a young age. I was just a teenager ending high school, and I was fascinated by investing and what was happening during the dot-com bubble. The valuations were so much higher, and there was basically dead fiber, dead connections all over the place. They were just building bridges to nowhere, just like China's been doing, and they're getting hurt now. None of that exists. We can't build enough right now. So I just hope you can understand that. Those tokens are now being used to generate code, bespoke software that will increase productivity throughout the economy. You can get 300 agents working for you at one fucking time right now. The return on investment on CapEx is likely to dwarf the CapEx itself, which is why investment continues to grow. So just in the biggest companies on earth in the United States, investing $700 billion, then you've got the Chinese economy desperately doing that too. And then you have other economies around the world trying to do the same thing. And then you have all the mid to small size businesses that are doing those investments too, that are correlated with this whole trade and or going to be in the future. And people just haven't realized it and bid the stock up yet. You have all that going, and it's a freight train. It's a freight train. We're nothing like the dot-com bubble. Maybe we are the dot-com bubble, but it's 1996, motherfuckers, and you want to be invested. Does that make sense? Chat, can you feel me on this one? I wouldn't buy CAT at this price, but I don't know enough about that particular industry to be able to speak of it. I'm not trying to be an expert on fucking everything. I'm just trying to big picture tell you what the world looks like and be an expert on some things, or at least try to be. We've got more data. I want to finish this AI stuff, then we'll go to the economic things here in a second. But in Q1, AI was already 75% of GDP. 75%. Wait, shut the fuck up. You're telling me that 3/4, that other service-related data isn't that bad? And that some of the other data, that metrics that we have, like unemployment, we're at Continued jobless claims, guys, were at levels that we haven't seen since 1969, and that was a good thing. So on top of all that shit, 3/4 of GDP growth was just the front funnel of the AI development. Just the front funnel. Well, and then there's gonna be trailing effects, right, JT? AI, could it be 95% of GDP? I think that's probably stretching it. It could probably be 90. Could probably be 90, and indirectly it could be 95. If you're looking at all the companies that kind of benefit along the way because of this freight train, it'll start rolling. It'll have secondary and tertiary impacts, and all those companies will end up doing well, and people will end up benefiting as well. So. But this is a huge number. It's a massive driver behind the U.S. economy. And we're it, guys. We're it. If you're looking at the investment world, Europe is weak as fuck. We're it. And AI is at the forefront of this. Please to God realize that this is structural and that we're at the beginning of a golden age. How long have I been telling you we're at the beginning of a golden age? I was here. My biggest viewing day was when I did a 9.5-hour live stream with Donald Trump winning the election. And I told you then that we were at a golden age. And I told you that it could take a year because back when Ronald Reagan implemented the same kind of policies, but not even to the degree that Trump is doing, he's done so much more. And then clearing out Venezuela and cleaning up Iran, getting ready to overtake Cuba this week. It's just insane. And then you have all this build out. I don't know how people are bearish. I don't. Nebius received a 40% prepayment from Microsoft. They got $7 billion up front on their latest agreement. That seems like a lot. Again, calls of AI bubbles when Goldman Sachs projects a $7.6 trillion in AI CapEx by 2031. I don't know how you call this an AI bubble. I just don't. We have Andre Steno Larson. He's got a little TDS, some baby TDS. Why do we keep talking about CapEx bubbles when the backlog of the same companies is rising substantially faster than what they're putting out and charging in the market? I mean, what the fuck? The total backlog for a Mag 7 RPO, what they need to do is growing astronomically versus what their investments are. And so we're at the front end of the funnel. We have Lisa Su, the CEO of AMD, saying that there's 151% growth and compute for these data centers over the next 5 years each year. She said it needs to go 100x. That's 151% growth a year. Micron hasn't seen that yet. Hynix hasn't seen that yet. This is nuts. And don't get me wrong, there could be a pause in here where because of energy generation spin up not happening quick enough, where we get a slowdown in chips. Guys, chips, I think Sachs, the chip sector, is way too highly valued. I want to make a comment right here. So Tanner Manson, Future Invest, my buddy, my Canadian brother from another mother, said the market is splitting big tech into two distinct tiers. Forward PEs above 30x, Amazon, Apple, Google. Forward PEs below 24x, NVIDIA, Microsoft, Meta. These are the underperformers, right? The market is separating price for acceleration, price for execution. Now, this was a great comment. I love that. But I just included the, hey, I think you need to pay attention to other stuff here too. Actually, I don't know why this one's here. You need to pay attention to other stuff. And he responded to that as well. Because we have DRAM that has a PE of 5, a forward PE of 5. So again, these guys are in the 20s. These guys are in the 30s. What happens when Micron is at a 30 forward PE? Can anybody do the math? What about when people continue to see the EPS going up and the growth margins going up and the revenue increasing faster? This is like NVIDIA again, only we're halfway through it, maybe a third. So if you like a 10x, I mean, over the next 3 years, you could probably get it. It's probably 3 years out. That's assuming a lot of things, but I think you could conservatively get a 5 over 2. That seems like a good deal. Anyway, let's keep going. Somebody, I don't know who this guy is, but his name is just a bitch. But he says why I believe memory is structurally underpriced. And he goes through a lot of the same things that we've just talked about. But it's not just me saying this. That's what I'm trying to say to you guys. What do I have this in here for? Most of the change comes from trying to... okay. Well, this shouldn't be here. It should be somewhere else, and I've got it bookmarked there, so we'll skip it. Trade Whisper, April 30th. Shorts are fucked again. NAND prices keep going up. This is a single session surge. So can you imagine this, guys? Look at this. The NAND prices are going up by anywhere from 4.62 to 8.8 in a single day. And I'm trying to compile lists of the AI rotation watch list, semis, memories, photonics, optical. I'm really trying to focus a lot on learning about this. If you guys have the best people to pay attention to, I think Jordy Visser is one of them. I don't know who else is. If you guys have other names, please let me know. I follow Serenity, and I follow a few others too that are like really tech nerds in these particular subjects. But I want to know I've got the best of the best. So please throw it out there. Again, just hyperscalers reaccelerated their CapEx guidance. If you look at some of these numbers like Google, Meta's kind of chilling. People freaked out about the 10 billion, but they're not doing much. It's their headset. It's their VR augmented reality stuff that's killing them right now. They spend so much money on that. But look here at Google, look at Microsoft, even Amazon. Like, it's just going up. Tesla's the same way. Intel is now selling scrap CPUs. Surprised? Absolutely not. Micron, Samsung, and Hynix have been doing this since last year. Edge of wafer dies. So they're selling ones that suck where they don't work as well. And yeah, so Jordy's mostly into chemicals and power. Okay. Does he do optical or any of that stuff? But yeah, so I mean, you've got them selling the junk, right? They're selling the junk because they're so desperate. And again, people have different maps. This one is from Bilal. I've started following him too, but it just shows neoclouds versus energy, networking capacity, memory storage, server OEMs, compute. I don't like Supermicro at all as a company, but maybe it comes back. And VRT has went up a lot, Vertiv. There's some companies that are really highly valued, but again, memory is not. Memory and storage is not. And DRAM gets you that. Yes, he does optical. That's what I thought, Kirby. He previously talked about Corning Optical a few months ago. Yeah, so he's not too deep into it. I need to find people that are deep into it. So that's going to be my focus. Maybe that's what I'll do with my AI agents when I get them set up on my Mac Mini. I'll have them doing that work. And again, just showing the growth in CapEx just from the major hyperscalers. Here's Jensen Huang. I don't know if you guys have heard of him. He's a CEO or something. What does he say in here? This is 7 minutes. I might not read the whole thing, but he says essentially, don't listen to CEOs that have a God complex. That is Dario that he's talking about. He's probably talking about Dario. He's probably talking about Sam Altman, a few others. But Dario is the doomsayer from Anthropic. Anthropic was doing really, really good. Their revenues are beautiful too, $42 billion, I think, in a quarter or something. But they were starting to pass OpenAI. But now I've heard that OpenAI GPT 5.5 is kicking Anthropic's ass, and now everybody's flipping to it because you use these tools that let you go back and forth and pick between all of them, and so the tokens just move in real time from the people that are hardcore. But he said essentially, don't listen to those people about AI destroying jobs. He said these kind of comments are not helpful. Somehow they became CEOs. You adopt a God complex before you know it. You know everything. He thinks, or he said, ground yourselves to talking about the facts. AI will generate hundreds of thousands of jobs, trillions of dollars to the U.S. economy, and it will. Electricians are in high demand. Everybody building out the infrastructure for this is in high demand, and everything going downwind will build a bunch of jobs. Now, there will be jobs going away at the same time. White-collar jobs will go away because of AI. Blue-collar jobs will go away because of robotics. All these things are going to happen, but we're also deporting probably 10 million illegal immigrants over the next 2.5 years. So, and not by deporting, I mean most of them are going to go on their own once the government benefits stop. So, and I'm not trying to be political. It's just the truth. That's what's going to happen, okay? Recognize that. Be okay with it. This is another good example I wanted to show. It just shows the profit projections for 2027, and I showed this a little bit. We'll stop here, but Samsung Electronics has a $331 billion profit projection for 2027, but they're a $1 trillion cap. If we look over here to a comparable, we don't even have one. We could add up Apple and Microsoft, which are $7 trillion in companies. which tells you this is 1/7 the value. You get a similar metric, 1/6 to 1/7, no matter who you look at. It's so hard to buy the MU chart. I get it. I get it. So here's the thing, guys. If you're just a chart guy, if you're a squiggles guy, it is really hard to want to buy this, right? It's really hard to look at a chart like this and be like, whoa, there's major upside ahead of us. It's really hard to believe that, but it'll come. It'll come. It'll be up here soon enough. And by the end of 2028, I don't know, it could probably be 2000 at least. Or maybe even in 2028 or at the beginning. It's hard to know. It depends on how big the bubble gets. We will be in a bubble eventually. Tesla stands out a bit. Tesla's finally catching up with its valuation, and I think it's going to be a great story at some point this year. I don't think it's right now, but it will be. This is amazing too, guys. Just, again, Grok isn't even good when it comes to a lot of AI. And when I say that, that's such a loose term. For retail, it's great. It's amazing. For hard research like scientific or financial, whatever, it's not going to be as good. But look at what it can do. This is a tutorial made by Grok Imagine. This isn't a real person.
Generate and edit images, then turn them into videos all in one place. Say I want to make an ad for this shirt. I'll have Grok generate models to wear it. I'm looking for a woman model with long hair. They're all great. Let's pick this one. By the way, if you don't know what angles to shoot, just ask Grok in the same chat. It's your place to both create and brainstorm. Here,
my wife is creating an entire world based on like a book that she would write and some stories that she was putting together. And she can just build out an entire world in Grok. And Grok isn't even the best tool right now. Just imagine this, guys. You could do this right now and build companies this way. And people are doing this.
I'm going to generate my full photo shoot.
You just created a marketing line for a shirt that you have. And again, there's some companies that can kind of do this. They already do this with their products. It's like an all-in-one. They do all the work and they get to keep some of the margin. You could do this on your own, though, with anything in your own business. You don't even need them.
And this is just...
Imagine how much that empowers an advertising person that understands how to use the AI. That's where the jobs are going, guys. Jensen Huang has said this very clearly. People who know how to use AI are going to take jobs from people who don't. That's the world. This is a fucking AI person.
Just one simple example. Whether you're in film, marketing, or running your own brand, make more images and videos faster. Just like this video of me, which was created in Grok Imagine Agent mode.
So just realize this is real. It's happening. It's going to go with you or not. Let's listen to Lisa Su here for 1 minute in her own words talk about the growth in compute, okay? And then we'll be done with AI. Sorry for taking so long on it. I just want to cover AI is going to be a big part of what we're talking about, guys, and everything that deals with the chain. It's going to be one of my primary focuses over the years ahead.
You know, we think we have to increase compute.
I like it more than defense and all this other stuff. It's just it's more up my alley. It's going to be something that I can do the best at, along with Bitcoin and finance.
By another 100 times.
100x.
As you go over the next, 4 or 5 years. And I introduced a term last night, the YottaFlop.
So if it's 4x, or I'm sorry, if it's 4 years at 100x, then my 151% is wrong. It's like 200%, closer to that.
Flop, people are like, what is a YottaFlop? A YottaFlop is actually 10 to the 24th in terms of flops. So that's a 1 followed by 24 zeros. And to give you, just a view of just how much things have really increased, I mean, that's another 100 times more compute than we have today. So that gives you an idea. Now, you think, what are you going to use all that compute for? I mean, the truth is, the models that we have today are great. I mean, they do amazing things. We talked about a number of use cases. Perhaps one that's hits very close to home is writing software. Like people are using the AI tools right now to significantly enhance the productivity of software developers. But it's good. But it can get so much better. And I mean, I think that's the key point. We like to say that AI is really going to be everywhere, and it's really for everyone. And it's for each one of us to make our businesses more productive.
Imagine how many businesses there are going to be in the future. Just imagine how many they're going to be. You can do this on your own.
Each one of us more productive,
yes, JT,
going
exactly.
forward. And so we're still in the very early innings of really unlocking the power of AI.
Yeah, and she's 100% right. And just imagine, guys, I just showed you Grok Imagine and what it can do now. Can you fathom what that's going to look like in the future? It's nuts. It's nuts. I'm going to see if there's anything else. Again, AI hype meets hardware crunch. We're going to have, this is probably one of the biggest bear arguments right now that could be somewhat legitimate, is that in the future at some point we could have power shortages. But here's the deal. Everybody's building out power across the entirety of the earth, and they want these fucking chips. The Middle East wants them. The UAE wants them. Saudi Arabia wants them. So the chips are getting sold no matter what. Even if power doesn't keep up in the United States, and we're going to be busting it, China's busting it, the chips will find their homes no matter what. And if the chips are finding their homes, the memory is there with them. That's it for AI and chips, guys. It's a long session today. That's the cutoff point. What's the wife going to have for this video? I don't know. It's probably a lot. All right, I want to get back to U.S. economy real quick, and then we'll get into Bitcoin. There's a bunch to talk about there. So again, I told you, multi-year RSI pointing down. I think we'll get above it, but that doesn't mean we can't drop down to here first. The war could impact that. The war hasn't went away. 7,000 to 6,900 is the bounce zone. I'm not worried about it. I think that memory is going to do well no matter what. And let's see where DRAM's sitting right now. Up 4%, 4.08%, still sitting in a good zone. Real quick, I want to check other things too. Oh, and I've got to get to Jameson Greer and hear what he had to say, so we might jump to that. Fear and Greed Index. Greed for the stock market is at 66. It's come down a little bit. Not too crazy right now. Let's see what it is for crypto. We are just out of fear into neutral at 45. I'm liking that. Let's see for earnings here. Somebody was talking about Palantir earnings tonight. Will be interesting where AI meets software. That will be interesting. If Palantir, even just one time, doesn't make earnings, it's going to be bad for a lot of companies, because people will just throw out the narrative of AI dying and Palantir being an example of that. There's always something that people want to push, but that is happening today. Euro Copper is happening today. I'm probably selling out of my copper for now. Copper, and then what was the other one that I was going to sell out of? There's another one. There's probably like $40,000 worth of trades I'm going to make this morning, maybe 50, I don't know. But I'm going to be selling out of those, and I'm going to be looking towards whatever goes down today. And again, I think we could go down a little bit. I'm excited to see what goes down. Tomorrow, Cypher earnings before the bell. So we got Palantir and Euro Copper today. Cypher earnings before the bell tomorrow. And then AMD, MicroStrategy, and TIM. So MicroStrategy didn't buy this weekend. Bitcoin, they did that because it's earnings, and they're not going to buy on an earnings week. That's how things work for disclosure reasons. So all that's good. Let's look at economic data super fast. I want to see if we have anything. Mondays are usually really quiet, but let's just make sure that we know what's out there. Total vehicle sales. Let's look at this. So they came in at 15.9. The estimates for consensus were 16, and forecast was 16.1. I am not worried about vehicle sales. That is not the AI story. I don't really give a shit about it. We have factory orders coming in at 9. That should be 8 o'clock here, so in about 7 minutes. So we'll keep an eye on that. Actually, I think that is my time for Central, so maybe it is 9. So we'll probably be done by that time. All right, got that out of the way. Wealthy investors are all in on equities. Equity allocation among high net worth individuals is up 65% of total assets, the highest since December of 2021. So I will just say this: if the Fed wouldn't have raised rates at one of the most aggressive rates in history, we wouldn't have had this big crash that led into the end of 2022, right? So we're just getting back to where we were. They're still not allocated enough. They're going to be even more. CleanSpark hasn't said their earnings yet, and that's weird. Yeah, that is. I wonder if there's any deal things going on or what. Will NVIDIA have its Intel moment? What do you mean by that? Are you talking about Intel ages ago? All right, so I want to show you all kinds of stuff that deal with wealth. This is wealth migration. This chart, let's just see. This is by state. What year is this? I think it's in here somewhere. It's probably actually on the page. Oh, 2023. So this is old, but it still shows you dramatically how much things were changing. This pattern has not changed. Liberal areas on the coast are dying. Washington has more recently implemented their highest state income tax, I think, in the country now. So they're going to get decimated. California was already getting decimated. Illinois was getting decimated. New York was getting decimated. A lot of these stronghold liberal areas. Colorado was actually still doing okay then. Now they're deep in the red. So if you're a liberal zone, you're pretty much getting fucked. And if you're conservative and in the South, where we're embracing energy and, you know, the ability to not have all your money taken away from you, if you're a company or a person, everybody's moving here and they're getting rich as fuck. That is a structural trend that you need to be aware of. I want to listen to Tom Lee talk about what he thinks of the market over the next 18 to 24 months.
Whether it's in tech,
this is from the end of last week,
healthcare, or financial services or fintech, that's really U.S. companies. And I think there was an argument the U.S. PE should derate, but the war has exposed that the U.S. multiple should be going up.
Really? So that could be accounting. We could get both earnings and multiple expansion this year?
Yes, I think once we're through, this is still going to be a very tricky year because we have a new Fed chair coming in the market. It's going to test that Fed chair. Oh, but once we get through that subsequent turbulence, we are probably entering, an 18 to 24-month period that might be one of the best we've ever seen in our life. Whether it's in tech, healthcare, or financial services or fintech, that's really U.S. companies. And I think there was an argument the U.S. PE should derate, but the war has exposed that the U.S. multiple should be going up.
Really? So that could be accounting. We could get both earnings and multiple expansion this year? Yes,
I think once we're through, this is still going to be a very tricky year because we have a new Fed chair coming in the market. It's going to test that Fed chair. But once we get through that subsequent turbulence, we are probably entering, an 18 to 24-month period that might be one of the best we've ever seen in our life. Whether it's in tech, healthcare, or financial.
That sounds pretty cool. I want to jump over here. National defense. All right, let me see at this. I thought we had Jameson Greer too. Let me just go back. I gotta see if I can see him. Sorry. Oh my God, the GameStop CEO talked, guys. He is such a moron. He is just one of the dumbest fucking people on this planet. Watch that interview if you want to be amused by the idiocy of anybody that would be willing to invest in that company. It was not good at all. Let me see here. I'm trying to find Jameson. Maybe I need to go back further. There's Warren Buffett. Buffett. Sorry, guys. We're going to get there. Let me see. Maybe they didn't get Greer. I'm just going to jump over to here. Or let me see. I might just go a little bit further. Maybe I'm missing it. Warren Buffett. There we go. I found him. Here we go.
Shot of the White House live this morning. President Trump announcing he's going to be raising auto tariffs on the EU to 25%, citing non-compliance with its trade deal with the U.S. Joining us right now is the United States Trade Representative, Ambassador Jameson Greer. Good morning to you. Tell us more about where things stand in this regard. And I imagine there's going to be pushback, of course, by the EU. But let's talk about the implications more broadly on the auto business.
Sure. Good to see you this morning. Remember last summer, go back to Turnberry, President Trump struck a deal with President von der Leyen and the European Union where the United States would adjust its tariffs. We have 25% tariffs on cars and auto parts from the world. We agreed to reduce that to 15% for the European Union, along with other tariff reductions for them. The European Union on their side agreed to reduce their own tariffs on autos and reduce their tariffs on all industrial goods to zero. They agreed to change a bunch of their regulations or provide some flexibility to the United States. They haven't done any of that. They've moved a tariff bill along in the European Parliament. It's been very slow. They have a bunch of amendments attached to it that would limit U.S. exports and limit the deal. And so at a certain point, after discussing this with our European colleagues over many, many months, the president decided that if the Europeans aren't implementing the deal right now, then we don't have to implement all of it either at this time. So the autos piece is just one element of that, and we're in constant contact with our European colleagues on how to come into compliance.
Should we consider this just a piece of a larger negotiation, or is this a permanent state?
Well, it's one part of the deal. The deal has the auto tariffs piece to it, but the European Union promised President Trump that they would reduce all of their industrial tariffs to zero, that they would provide duty-free quotas for certain U.S. agricultural products, and they would simplify some of their regulations to benefit U.S. companies. So it's just one element of the deal. I was in contact with both European and German trade officials this weekend to help them understand, why this was happening and remind them of all the conversations we've had about their compliance. So I'll continue to have those conversations, but the president's moving forward with this action.
Ambassador, we're watching the stocks of some of the big European automakers, whether it's BMW or Mercedes or Volkswagen, falling this morning. I have a larger question for you about the automobile industry in the U.S. and how you think about it. Obviously, one of the big issues is actually preventing Chinese manufacturers from getting their vehicles in here, and they make those cars at much cheaper prices. But I was talking to the CEO of a major U.S. automaker, and he said, look, in a decade from now, we're gonna have just a domestic. The business is going to be a domestic business. The kinds of cars we produce ultimately will probably be very different than the kinds of cars that are going to be elsewhere around the world, and to some degree, they might not be as good. What do you think of that?
Is he asking dumb questions again?
Well, I would say in the first instance, the U.S. auto industry in recent years has been very focused on the United States and the North American market. We certainly export, and the German company.
If this is just about that, I do not care. So we're moving on. I don't care about the car sector. Again, Europe needs to get their house in order. They'll be doing that soon enough. I do want to talk about our new Fed chairman that's going to be going into power here real quick. Kevin Warsh. Let's talk about that. I said, so Crypto Tice had Kevin Warsh on here, and Bitcoin will ignite a massive economic boom. I don't know if he says all that in here, but he said that numerous times. I do want to hear what he says in here, and then we'll go with my points.
What we call AI in a couple of years, we'll just call business. And AI is going to make almost everything cost less. And the U.S. can be a big winner. And it's a hugely exciting moment. If I were to step back for a minute, if I were the president, what I'd be worried about is a central bank that doesn't see any of that.
A central bank that doesn't pay attention to AI, that doesn't pay attention to Bitcoin. He called Bitcoin the gold for today, okay? The gold for today. And again, we're heading towards a great place. This new Fed governor is going to get that. There are a number of changes that he's going to be able to make right away, and we'll talk about that, the way they pull data. We'll talk about what he can and can't do without the buy-in of the rest of the governors in a second. And why I think he's going to get the buy-in no matter what because of what he's doing. So 1 second.
A central bank that is stuck with models from 1978, governance from a prior period, and don't recognize we could be at the front end of a productivity boom. And if I were the president, I'd be worried that they might not see it. And they might think economic growth is somehow going to be inflationary. I think we were probably in the early innings of a structural decline in prices. Ken sees it on the front lines of real businesses, and I think if you look over the period of the next year or two, it's a pretty special moment.
Special moment is what this new Fed Fed chairman has to say about what's getting ready to happen in the U.S. economy. A special moment in history that a Fed governor and that the body needs to understand, because it's going to be disinflationary and deflationary with the advent of these new technologies. While we're seeing rapid amounts of growth. And the last thing this man wants to do, we'll talk about Ray Dalio because he has an opinion here too, like an idiot. And he's done well, but he just does not understand what this economy is doing in AI or any of it. But you don't want to keep rates high and really fuck the bottom end of the economy that's already been fucked for 6 years. Since the pandemic, they've been royally screwed. The prices of everything have went up. They got super indebted in cars. They've been screwed right and left. And they need better. They need to be able to refinance debts. They need money to be cheap. They need to be able to get credit cards with 0% offers. They need a release valve for the pain that they've been feeling. And they need to see wages going up, which they are. And they need to see less job competition by getting rid of illegal immigrants that shouldn't be here, that are dragging down their wages. They need help. They need lower interest rates. to help give them more monthly income and reduce their debt burden. And the government needs that too, and so do a bunch of corporations. Why would you be worried about inflation when you have massive disinflationary impulses coming from the technological advancement that is literally a golden age event? So I think this is what people are missing. I said, Kevin Warsh has also said that the Fed should lower rates in this kind of environment because of strong deflationary forces from technological innovation. 2, a need to help remove pressure within the bottom 40%. By increasing lending and lowering rates, and 3, massively helpful for making the debt issuance for the U.S. government more sustainable. So you show me the incentive and I'll show you the outcome. The incentive here is exactly what I've just said. And then we can look at the manufacturing sector, the ISM PMI, and we've been telling you guys Bitcoin will go up because it's driven by the economic cycle. The economic cycle is firing up from the manufacturing sector, specifically in regard to AI build-out. But then comes energy, and then comes everything else. And we've been seeing this in transportation and shipping too, because we listen to the right people. This is an impulse. It's a pretty dramatic one. Get on board. Looking over here, stagflation isn't justified by economic data either. Again, when you all of a sudden have massive growth, stagflation is inflation with no growth. You can't fucking call it stagflation. And oh, we better be worried because the markets are in a bubble. Well, more people think that it's bearish what's happening right now than bullish, okay? So it's not a bubble yet. The sentiment of people is still bearish. Lynn Alden, every once in a while, the Bank of Japan puts the fear of God into overeager yen bears by reminding them that it has a metric gigaton of reserve power. So she's talking about how they have a bunch of reserves, and some people think that, oh, they're just going to dump U.S. reserves and hurt the United States economy. They do have a bunch of reserves. They also have swap lines opened up with us. They have power to be able to fuck the shorts that are trying to bet against the Japanese economy. We have the power to do that on crack. So I hope people realize we haven't had a recession really since 2008 because it's not possible anymore. And it won't be. AI is going to make that even more impossible. I said this will only increase. Paolo, he's the CEO of Tether, said Tether is a top 10 buyer of U.S. Treasuries in the last 2 years, buying more than Taiwan, Israel, the United Arab Emirates, mitigating 45% of the $133 billion sold by China. And this number is just going to grow. So, again, Clarity Act probably coming soon. That's been pushed for markup because now Senator Tillis evidently is on board with getting it through. And that's what happens. Things happen because they need to happen, because the incentive is there for it. George says, what is your take on Tom Lee's call for a crash when Warsh takes over? We might have it right now. We could just have like a week where we don't do anything. I don't think it has to be a crash, and I don't know that he's called it a crash, but he said that the markets test the new Fed. That is true, but also you have to realize that the first time, for instance, well, Janet Yellen was an idiot. That's the one reference that people like to use for testing the Fed. She was a fucking moron, so it makes sense that didn't go well. The next one was Jerome Powell. Jerome Powell seemed like an idiot because what did he do right away in 2018? He went ahead and started raising rates for no fucking reason, just to crush the economy and I'm new here. Let's see. I'll just raise rates because I don't want to see what it does. Oh, shit, that didn't work out. Better stop. And then in 2021, 2022, he raised rates at one of the most aggressive rates in history after saying inflation was transitory. So these are the 3 reference points that people like to use where they say that the Fed will get tested. This Fed believes in AI and Bitcoin. This Fed thinks that we should be lowering rates to juice the economy. This Fed wants to use data like Trueflation and other real-time metrics instead of looking in the reverse. That's something he can do without Fed governors voting. He has control over the data collection. Not they have to vote on like, we'll replace this with this, but as far as getting data together and debating it and trying to figure out where we're headed, he's going to be able to prove that case using real-time data way easier than people that are using stuff that's 2 months old. Daniel said the U.S. economy is much stronger than any G8 peer, and it's true. I won't go through all the details. They're laying off people. They're having tons of problems. We don't have those problems. Matt, this chart kills the bubble narrative. Tech is hitting new highs with the forward PE and a 25% drawdown. What is he talking about? Technology forward PE 52-week drawdown, and this one technology price 52-week drawdown. And what are we seeing? We just got to a new all-time high in the technology sector, but the forward PEs are being reduced. So these things are getting cheaper, not more expensive. I hope you can grasp that. That's a pretty important concept. Ren said this is one that Tom Lee retweeted, to think people are expecting the bubble to pop like it did in the dot-com era. Today's Mag 4 PE ratios, 16, 17, 24, 25. Dot-com peak PE ratios, Microsoft 73x, Cisco 200, Yahoo 800. That makes fucking Tesla look uber cheap right now. And Yahoo wasn't a real company at that point in time. They just weren't. And again, even consumer confidence soaring. There's just so much on the economic side, guys, that looks really good. I won't go through all of it. Again, EPS jumped an incredible 3.4% in 1 month. The growth estimates are through the roof. Let's listen to Hassett real quick here and what he has to say about the initial jobless claims. And then we'll be done with economy and we'll move on to Bitcoin. Well,
first of all, let's talk about the economic data for a second, because it was just kind of a whole bunch of blockbuster numbers. The 2% number, actually, for me, being capital spending guy, I used to be the capital spending guy at the Fed when I was a young economist, that the thing that was amazing, as you know, and you highlighted, the capital spending boom. And one of the things that sort of dragged it down from a really high number was that the quality of the imports has skyrocketed. And so almost half of the imports were capital goods, which were coming in to build factories in the U.S. Typically in the past, our imports are things.
So almost half are building, which is going to then, again, when these things spin up, you've got jobs, and then also you've got jobs being pulled in to build. So you've got all this growth. He's saying we're right at the front of the funnel.
Like consumer goods that are perishable, and so the bottom line is that it's really strong data. We got initial claims.
Yeah, we don't care if they buy a bunch of perishable items with consumers. We want the building. The
lowest they've been since the 1960s. We got government employment, the lowest it's been since the Second World War. We've got all these positive movements in terms of fiscal responsibility and economic growth moving forward. And so then, but we do have this temporary disruption with energy markets, which is very serious. As you mentioned, the energy prices are high, gasoline prices are high. But, my read of the academic literature on what you do when you have an oil shock like this is not that you raise rates into it, especially given.
Yeah, it's literally it's a exogenous shock. Is that what I'm trying to say? It's a shock to the system. COVID was a shock to the system. COVID didn't cause prices to go up. Just to be clear, guys, not in a sustainable way, because prices flow with supply and demand. Once people started building enough, prices should have came down a lot, but they didn't. You want to know why? Part of that is just literally, the vast majority of it is the money printing. When you print trillions of dollars, when you print 40% of the money that ever existed in this country's history since the pandemic, it's probably 45 now, you're going to have permanently inflated prices. Now, if this shock would have just happened, or we would have been smart and said, don't lock down the entire fucking country, this doesn't make any sense. What is the actual data? Hindsight's 2020. We can't do that, right? But we probably would do that now. People wouldn't shut down for COVID anymore. I've heard about horrible strains in China. Nobody gives a fuck. Nobody cares at all. So we didn't have to shut down, and it would have just fixed itself. But we printed a bunch of money. So what he's saying is that isn't what's happening right now. Iran, we've got prices offset, but again, oil is not in a deadly zone. It need to be like 140 to 200 to start constricting the economy, and it's nowhere near that. And with inflation adjusted, we're nothing like the 70s right now. Again, $200 oil to be able to make that comparison. So we're just in a good place. I don't think people understand this. Let's let him finish.
How I think we're highly confident that this is going to be a temporary disruption. Futures markets agree with that as well. And so I think it would be a policy error for, this ECB or the Fed to hike rates.
And the ECB is talking about hiking rates. The European Bank wants to hike rates. They're just fucked.
Into a temporary spike in energy prices. And their own, economic studies sort of suggest this is true, because if you look at it, what they want to do is make sure that future inflation goes back towards the target. The best forecast of future inflation is not top-line inflation, but core inflation. And core inflation in the last CPI number was fine. The PCs kind of crept up a little bit, but it doesn't tell the story of the top line.
And again, when you fix the issue with Iran, which I think they're going to crack in like the next month, they could last longer, but I don't think it matters. I think there's enough willingness for a coalition to ensure that the strait is safe to pass where we're going to make that happen. And we can blow up all these boats, guys. We just haven't done it yet because I think we've tried to force this coalition into creation, right? And you don't start fixing the problem if you want people to join it. And if you want to pressure them to maybe, I don't know, build in America, buy our oil, buy our LNG, buy our chemicals, sign contracts with our buddies. You know what I mean? Like, I think that I think we're just finalizing relationships, and then we're going to be doing that.
The top line.
But he's 100% right. Ignore the top line. Focus on core inflation. That's what matters. I don't know if there's much more to talk about here. Yeah, I think we're done there. Let's go to Bitcoin. Said, in hindsight, there are always ways to confirm when something is bottomed or topped. Not everyone can see them in advance, though. 3 white soldiers is inbound. It ain't bearish. This is what we're seeing for the Bitcoin to gold ratio. Again, gold is rolling over. I showed you that a little bit. Bitcoin is going higher. We called all of this. What do I mean by that? Well, let's look here. January 2029. Hey, guys, this is like head and shoulders. The measured move is down to here or even further, right? The measured move could be all the way down here to like 10 or 11. Well, where did we land? Oh, right where I said. And then we redrew the line here that acted as support here, resistance, support. And so, again, you can see these things ahead of time if you know how to look for them. I put also this morning with Bitcoin, I said, not quite a breakout yet, but close. And again, I think we're going to get over the 200 moving average. We could wait a week to do this. We've got this big volume range right in here that is just glorious. And we can just bounce around in here, trade down to the low 79, 78s. We could even go back to here for a second and then pop back up again. It doesn't mean that we're done at all, especially if we end up bottoming somewhere around the 75 range, if that were to happen. I don't think it's going to, though. I think what's happening with MicroStrategy is just amazing, and I think people don't understand it. Frank put short-term holders cost basis is a big one, too. So what did he say? He said 79,000 is a key threshold for when we go higher. What are we sitting at right now, guys? 79,000, right? Like, this is the resistance zone that he's talking about right now. And he's right. This is a big one. When we pass that, if we go back up here, then just like I had said, 87,000 is key. Frank seems to align with that too. He's looking at the investor tool model, investor tops and bottoms, 2-year SMA. And he's saying 87 is going to be the big key target. I'll show you a chart that says that exact same thing. And 435 is the potential for the top. It's possible. If you're going out 2 years, that's possible. Also, documenting Saylor put, we're still early. He showed the global stock market of 140 trillion, the $35 trillion gold market, and how Bitcoin is only 2. I put add in real estate, the bond market, and every store of value on the planet. $50 trillion bond market, just in the United States. It's like 150 if we go across the world, maybe 2. I don't even remember. There are so many different stores of values that Bitcoin will pull from. I said, wouldn't you fucking hate this? Imagine being a bear. Imagine being a Ben Cohen or Jason Ponzino, whatever the fuck that loser's name is. Imagine being one of those guys, getting up to the 87,000 range, and this is around 90. This is like where I believe we're going to kind of have peak resistance. 87 to 90 is really where it's at. But once we break above that weekly 50 moving average, once we get above this volume here, it is game fucking on. I think that's happening this year. That could happen by summertime. The sell in May and go away thing is not real. And there's performance in the U.S. economy, or I'm sorry, the stock market, that shows historically that when we have months like we just had for this year and for April and the breadth thrust, whatever you're looking at, that we can go much, much higher for May and June. Could we have a pause in there? We're probably going to at some point, right? We're probably going to at some point. But who cares? Ride this up. I think Bitcoin is cheap until at least 125 if you're bearish for this year. And if you're in the middle, I think to slightly bullish, you think that we're going to get in the 140s. And then if you're uber bullish, you think we're doing that breakout to go into the 2s. I actually think it's probably going to be the latter, but I think that'll become more clear later and people will start to FOMO. This is showing the world's most cash-rich companies, Berkshire Hathaway obviously at the top. But what I wanted you to take note of in here is that, first off, China is not one of them. China doesn't start until 69 billion. And then you get a couple of different ones because China's one of the most populated places on Earth. But look at Berkshire Hathaway, 381 billion. It dwarfs like all of China's combined. And then we have Alphabet, Amazon, Interactive Brokers. I didn't know they were so high, actually. Microsoft, Charles Schwab, Meta, Apple, NVIDIA. We're just all over this fucker, right? So imagine if they start doing a 5% allocation to Bitcoin or even a 2% or a 1%. I think it would be irresponsible not to. So again, I'm showing where this was kind of support, resistance for sure, definitely support over here. And then we got the 100 moving average. This is the next goal. So once we get above 79.80, once we turn that into support and we start the next leg, it's to 87,000 and that goes up to 90 in the 90s, maybe a little bit higher, maybe 92. Again, this is just another way of comparing the Russell 2000 or the IWM and showing that when it breaks out, Bitcoin breaks out. And again, we're seeing that again. This is another one, the supply held in profit loss cohort, and it shows bottoms here, 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 and here, and we're doing it again. There's so many different indicators like that. And I love this one, so I like Robert Breedlove. He's an interesting cat. He was talking about Diablo 2 helped him learn about money because there's something called a Soj, a stone of Jordan, that you had to trade as a currency because cash was worthless. And so if you wanted to trade anything that was really of value because it inflated away so quickly, you needed to have things that actually held value and that you considered tradable, like something as a currency. And so the stone of Jordan became that in Diablo 2. In World of Warcraft, there were a number of different things you could trade, but they were usually scarce assets like wool or leather or some gold that you mined. It was all these things that really held the value and that you could use for trading purposes, right? And to buy unique things, you had to come up with a bunch of different currencies. But looking back at it, he's 100% right. I learned about money from Diablo 2 and World of Warcraft. These games taught me when money is everywhere and it just floods the streets, people search for scarcity. And I learned about that back then as a teenager, and I didn't even know it. And that's maybe one of the reasons why I get it so well now. So video games can do something good. Bitcoin historian, breaking Japan's largest exchange, JPX, just told Bloomberg it will launch Bitcoin and crypto ETFs. World's fourth largest economy is opening up to BTC. Seems like a big deal. We've been screaming that Bitcoin will follow the business cycle, and that's what it's continuing to do. Again, ISM, PMI, just suffering. And I would argue that was why Bitcoin did not do well this last cycle, is because this was suppressed the whole time, so it kind of traded sideways. And that is why we're getting our parabola that's starting now. Meta, 3.58 billion daily users, has launched crypto stablecoins payout for creators. Probably nothing. I think Bitcoin is such a tiny market cap that both can happen. So what is this person talking about? They're saying, I don't think that MicroStrategy and BTC will do very well because of the AI narrative. I disagree with that. I think AI is going to have so much money pumping into markets, and so many people have made money from AI. If anything, they're probably going, maybe I should diversify a little bit. I've made 20x on Micron and SanDisk, or like whatever it is. Maybe I should diversify and get a little Bitcoin. Or I made a bunch on gold. Gold did really well. People said gold isn't going to do that well anymore. Maybe I'm out of gold because it looks like shit. Let's just look at gold as an example here. So gold testing the first fib line of retracement zone again. Not a great sign. Down 1% on the day. Really not doing a good job as a store of value. I think the trip down to the 200 moving average is almost guaranteed. Again, this was a $37 trillion asset. It's less than that now. Why would you want to keep owning that when you've just had a parabolic run? Why would you want to own this? If you were owned silver and gold, if it was the end of 2023 and in 2024 and 2025, you went from 1,800 to 5,800. Why wouldn't you sell that shit and buy some AI or buy some Bitcoin? I think that's what's happening. So I just wanted to be clear on that. And I think that inflows can come from gold and metals. I think they can come from AI. I don't think AI doing really well right now is hurting Bitcoin. I just don't. RHX, did you analyze the 10-year treasuries chart? Mark Newton is concerned it will go to 4.6% resistance at that level and probably beyond, which could spook the markets. You want to look at the 10-year? Yeah, we can look at the 10-year. So the 10-year is above. Could this spook markets if it goes higher? Sure. I would make an argument on it. It did do a tweezer bottom here, so I mean it can go up. I would make an argument that it's just a matter of time before this thing rolls over again. Could it be a narrative for a couple of days that this is a problem? Sure. Our 10-year and our 30-year look so much better than everything else around the world. I don't think people realize just how good it is. And let's see how much the 30-year got crushed last week. So again, definitely hitting key resistances here, wicking down pretty hard. Got all the way up to the 5% level and then went down to 4.98, which is a pretty big move for this. So again, it's being fought back, and I think that continues to happen. But again, will there be a time? You guys keep asking me the same question in different ways. Will there be a time that there will be a breather in markets? Yes, there will be a time that there's a breather in markets. I don't give a shit. The general trend is up. And right now, DRAM, again today, guys, everybody's telling me how foolish I was for jumping into this last week, but we're up another 4.23% today. Cash Patel's talking about Bitcoin. Everybody's talking about Bitcoin. Again, this is what I think is going to happen. My buddy Super Bro is also really good at this stuff, saying there's a magnet around the potential of 87,000, depending on how quickly we get there. I agree with that. That's probably enough on Bitcoin. I don't think we need to look at that anymore. Let's see what else we got on here. What else can we talk about? Investment basics. Let's see. We got all these different bookmarks. Do I want to talk about metals right now? Again, just gold probably going down. This is interesting. So rare earth, I dumped it in here, but rare earth plus CRML and MP, these look like they're breaking out. I think Bach does a pretty good job with charts. I agree with that. Let's see here. We did that. We did this. I don't know. I think we did a lot. Maybe. Oh, you know what? Let's look at Zeta real quick. I do want to look at that. And let's look at charts. We'll jump into charts. If you guys have anything you want to look at, throw it out. I'll do my best to go through as many as possible, but we won't be here too long. Zeta's free cash flow story is getting very interesting. In 2020, they generated $10 million in free cash flow. 2024, 92. 2026, 235. By 2028, projected for 371 million. 10 million, 371 million, 8 years. Just in 4 years, 92 to 371. Pretty cool. You got to admit, listening to it.
They increased every guy. They grew 50% for the first time.
So Amit's getting interested in it now because he's seeing Palantir-like numbers. And I've said this a few times, but I said Palantir, Hood, and SoFi all look similar to the setups that we see right now for Zeta. I still believe that's true. And also, people were upset because earnings happened. They went all the way up here to like almost 20, and then they just dropped down hard, down to like 18 and change. I actually love this. Again, all the moving averages are underneath of us. Right now we're sitting, let's see what Zeta's sitting at. Let me pull it up here. 1854. So we're sitting somewhere around here. We're above the 200, the 100, and the 50 moving averages on the daily, and we closed the daily gap that was formed from the earnings report. I love that. Wealthmatica, post-report thoughts. The team is executing. The product is superior. New customers are signing up. New ad agencies are signing up. Core business revenues are growing. Core plus acquisition revenues are rapidly growing. The trend towards sustainable profitability has fully commenced, and now I firmly believe in 2027 will be the year we see the inflection higher. I agree with that. What are we talking about for numbers? EPS, they got beat by 18%. Revenue was 7%. EPS year over year was 44. Revenue was 50. EPS down quarter over quarter by 54%. But again, there's seasonality involved in that, so I'm not worried about it. Revenue was still up quarter over quarter. So I think all that looks good. There's more here too. Let me just go down. Probably a few more things we can talk about real quick. Price target raises. So again, everybody all came out of the woodwork, 29, 30, 22, 25, 30, 23. Currently sitting at 18. It looks like we just went live. Ding, ding, ding. I'm going to pull up the chart on Zeta. And this one, again, grinding between peak volumes, first fib line, the 100 and the 50 on the weekly time frame. On the daily, we're still sitting above all this stuff and just guiding between these levels. Once we break out above 1870, it's going to be looking real good. We've got MicroStrategy up a little less than 2%, bouncing between 1.5% and 2% this morning. This looks incredibly powerful to me. This is a W bottom. It's still working on a measured move. This could almost be a shoulder ahead, and then we could shoulder over here into the 170 range even. Who knows? It doesn't have to do this. Up 2.64% now. Or we could go up here where really you could still consider this shoulder right up here to the 190 level, and then take a breather or hit this, take a breather, and then dip down a little bit and then go higher. But this will be a head and shoulders pattern, guys. And that head and shoulders pattern, which I do believe will play out, we'll keep it conservative here and not go the full wick, right? We'll just keep it where there's body, and we'll draw it up over here. This is getting us dangerously close to a breakout of this trend line, which means mean reversion to the 540 range. I think that's happening this year. I think 200% upside on MSTR. Let's see how Tesla's doing. Let's actually look at Metaplanet real quick. Nobody's talking about this one, but damn it, this is in Japan. This is one of the oldest, best charts you can look at because there's more history here. This looks like it's going to be an interesting breakout. It doesn't look far from happening. I'd say it's within a month, maybe a couple of weeks. And there's some interesting numbers that coincide with a breakout of this chart. I'm just going to pull some of these down here. You can see some of these numbers for 333%, 583%, maybe max gains this cycle over the next 2 years of 1,000%. I get kind of excited about that. Let's see what else we got going on here. Just trying to see what else. Oh, we got Strive doing well too, just like MicroStrategy, having another good day, 2.4%. Again, we're above the first fib level for extension. It is a 250% roughly upside to get to that next level. We got Smarter Web. It looks like was up 2.43%. We got BMNR up 2%. We've got TLT down today, 0.33. We've got ARGC up 0.53. We got Tesla down 0.4. We got SoFi up 0.85%. So I definitely say my selling SoFi and Hood. Hood is actually up 3.81%. It got really decimated, so it's starting to get a little bit of a bounce back. But I'm glad I made the move that I did with memory. I think it's going to end up being a lot better. But Hood, this is a good level of support. I could see Hood getting back up here to 94 in the not too distant future. SoFi up 1.13, Palantir up 2.8. Let's see here. We got Enphase down on the day. So again, I'm happy I sold out of that. I think things are sitting pretty good. I think I might even call it right here, guys. I think I'm going to. So I think we'll call it here. I hope everybody has a great day. I'll be posting a bunch online. I think we're going to have a good day, guys. I think the remainder of the week could be good. Will we have retracements like Tom Lee talked about? Yes. Maybe have a little bit of cash as you're making a bunch of money. Maybe take a little bit, but don't get too hung up on trying to get the fuck out right away, I don't think, because this is going to be a crazy year, and I think the next few months could be some of the best. So stay after May and don't go away is the new saying. I love you guys. I will talk to you later. See you online. Check out Thursday if you want to do a bunch of charts. That's the best day for it. Peace out, guys. See ya.